Good morning, traders. Hope you guys had a great weekend, a great Mother's Day weekend. Here we are back to Money Monday, right? So today, guys, I'm going over my trades from last week. So I didn't take a trade today. Here's proof of that. Realized $0. Didn't take a trade today, and I haven't done that a long time. I'm used to taking trades every single day. So a little upset about it, but that's okay, guys. This video is going to be really insightful. It was really insightful for me going back through the trades that I took last week, going over what I did right, and also going over what I could have done better. I think you guys will learn a lot from this video. Hope you enjoy. If you guys get anything out of this video, there's one thing I really want you to take away from it that's helped me improve my trading significantly, and that is the power of scaling. This is something I learned from my mentor Brian over at Intensity Stock Watch. Their scanners have been just unbelievable, guys. There's going to be a link in the description below so you guys can get the best deal on those scanners. And these trades came straight from the scanners. And what I'm going to teach you today is, I think, really going to impact your trading, because it certainly has mine. And that is the power of scaling. So right off the bat, when we look at KTOS here from last week, I was getting to the front side of this move. Now, conventionally, you would say, this is scary. This is a scary trade, getting in, shorting when this is green, it's going straight up. But we want to go against the grain, right? Not necessarily with the flock and the 90%. And that's where I've seen success, has been shorting these high intensity moves that pop up on the scanner and buying the negative intensity moves, the ones that are getting oversold very quickly. It's all velocity relative to the normal trading day. And the power of scaling, this is all going to be relative to your trading account, to what you're comfortable trading with, because we want to mitigate our emotions, right? We want to try to take the emotions out of it. And the power of scaling helps me do this. See, on KTOS, if I would have just hopped into this on the first trade here with a single entry full size, and right now with my account, I'm on a small account and I've grown it pretty well actually, and I've been striving for about $50 a day, and I've been doing that pretty successfully. Last week I had one scratch day, one day $100, and the rest about $50 a day. Here on KTOS, I started with about a third or fourth of my position size. So if my actual size I want to build up to is 500 shares, let's start with 100 shares or 150 shares and let it continue to work against you. But predefine your risk before you get into this trade. So what I always do, traders, always, you pull up the past chart history on every single stock. You understand the personality, where there's resistance, where there's support. Understand since we are getting abnormal volume relative to its normal trading day, what other day has it had this type of volume, and what was the range on that day? How high did it go? That's really the first thing I always look at, the past chart history. It goes without saying, really, you should always be looking at it. Just how in life, if you want to understand somebody better, take a look at the timeline of their life and what they've accomplished, the things in their life that they have done, and that'll kind of give you a perspective on the direction of their future. Now, it's not an exact science, but it gives you that direction to the future. So that's what we pulled up on KTOS, very overextended. Started building a position here, which made me very comfortable in the trade. My first position on this was 940, and my exit was about 10:05, so I was in this nearly 30 minutes. But because I'm getting into the front side of the move, when the buyers are coming into it, I'm taking a smaller position. I'm building that position that I want on it. And you risk a dollar amount. That's what I've been doing, risking a dollar amount, not necessarily like an exact price. So if the 200-day on KTOS was 18.25, I wouldn't necessarily be risking 18.25. This hit 18.35. What I'd be risking here is a dollar amount. So I'll allow the stock to be a little flexible. Let's say I want to risk $50. Then I risk $50, and I've been trading these very successfully. So more times than not, 85, 90% of the time, I'm going to come out on top of these trades. And if I'm making $50 to $100 and I'm losing $50, 1 out of 10 times, then this is going to end up working out. Problem that most people have is they don't predefine their risk, and they allow these just to get way out of hand, turn into the deer in headlights. Predefining risk is really the most important thing before you ever enter a trade, no matter what your strategy is. If your strategy is building a position on the front side of this move and on pullbacks, getting into it, building a larger long position on it, just understand your risk, whether that's a dollar amount or a certain technicality, if it cracks VWAP, support 90 MA, that sort of deal. That's KTOS. Let's move to the next chart, FOSL. This one, same type of deal. We had the 3 entries, and these 3 entries are really what I've been playing on. I'm not going to add more than 3 times on a trade. The first add I have on a position, and for me that's going to be about 100, 150 shares. For you, that might be 1,000 shares. For you, might be it might be 500 shares, whatever it is that just takes the emotions out of it and allows you to build a position. That's what's really most important. So 100 shares, 200 shares on FOSL, no problem, love it. Going to start building a position. I really don't even want to top tick this, but here's the deal. If I do top tick it and it starts working in my favor, I can add, which I did here. So I added, and then it gave me, a bonus round. Gave me another opportunity to add for my third ad there, and then cover on the flush. Ended up making my $50 on this trade as well, FOSL. So the same deal as KTOS, exactly the same, and that's what trading gets to eventually, guys. You're just doing the same thing every single day. Sticking to the objectivity, not trying to predict what happens, but just reacting to what is. That's something I've struggled with, I'm not going to lie. Not having that objectivity, just trying to predict, like I want the stock to get to this level, so I'm going to trade until it gets there, or I think this stock can do this because of this news, or because of these technicals. Instead of just trading what is, trying to predict versus reacts. That's FOSL, the same deal. Here we are on AVLR. Now this one was my mistake. I started my position here on AVLR, which was good, and then I top ticked it with my second ad. Then I broke even on this trade because I was just, those emotions were getting to me. I'm like, man, this has really big range, and I don't want to get caught. I don't really want to get caught on this one because it had like a 50-cent spread. It was making me a little nervous. So the emotions got me on that one, but ended up being an incredible trade there. The same deal, traders. Here we are on MTSI. This one ended up working right away. Just gave me a nice pullback, so I ended up taking that one off of a few ads there. Here's SUNW from last week. This one a little lower priced, and this one's a little higher in the flow. So it took quite a bit of time for this one to work out, but I had, that dollar risk I had in mind. I added here at the start of the day. This one was overextended from about 50 cents up to $2, so I'm still trading that overextension to resistance. That's what I'm looking for. Overextension to resistance, and then intraday velocity that's abnormal to the average trading day. So we're getting a really nice move on it. Now I'll start building a position on the short side. So SUNW, that one ended up working out, but took a long time. That one took quite a bit of time there. I set a stop and kind of went about my day because I had that, it's that predefined risk I had on it. That one just took quite a bit of time to work. Here's COHU, same type of deal. This one got overextended, pulling on up to resistance. I took my first initial entry. Didn't really add into this one. This one was around near 11 o'clock. I just figured, I think this one's going to fade throughout the day. I'll set a stop on it and let it ride a little bit. Next trade, ATNX, the same deal. This one was a grinder throughout the day. We got a nice push on it about 11:30. Started taking a position there. That one was around 12 and ended up covering that one for about 30 or 40 cents. Here's PEI, the same deal, guys. We got that huge move, added small position, takes all the emotions out of it, allows me to really let this one work. Had my 3 ads, just 3 there, and then on the back side of the move, ended up covering for a nice little profit there on PEI. That one took a little bit of time. From these charts, we're able to see that these are the same charts. I mean, it's just the same deal every single day. The 3 ads on the front side, the overextended move, and then covering as it starts pulling back. ZIXI, shorted that one into overextension, covered into a little bit of a pullback there. This one ended up pulling back even more, but I had the single entry, single exit. That's why I do like the 3 ads. The 3 ads allows you to build to that full position, allows you to be more flexible, but still rigid with your rules. And that's something Mark Douglas said, right? He said, be flexible with your expectations, but very rigid with your rules. So on these, have a very rigid, defined risk that you're willing to risk on it, but be flexible with, the outcome of it, the expectations. I don't have to cover my full position. I can cover half and then cover another half. I don't want to only be just kind of building a position as it's working against me. I want to be able to let these work for me when they start fading. That'll really allow for maximum profit potential, allowing these to work for me a little bit more when they're going in my favor. If I'm allowing them to work for me so much on the front end, I need to allow them to work for me on the back end as well. I think that's something I can really take away from last week. NWL from last week as well, top tick this one. This is an example of me top ticking, not being necessarily happy with it. I wanted to build a position, but then not covering my position right away. Ended up adding back into this position on a little bit of a pop. When this one gave a pop at all, I added to it because, I don't want to just be single entry, single exit. If I end up top ticking it and this one pulls back hard like it did, on a pop I can add to it and then just risk over high days. I'd be risking about half as less as I would have been, but the profit's going to be bigger. So I don't have to just cover in a pullback. Look to add, because this one ended up giving a lot back. There's a few different examples of different outcomes, and that's why Mark Douglas says be flexible with the outcome and the expectations, but be very rigid with those rules. The next chart here is SFM. So here's the bad example of me not doing what I did on NWL. I should have did what I did on NWL, because this ended up being a beautiful bear flag. On SFM, I just top ticked it and covered it right away on the pullback. Should have added into this. Man, that would have been a huge winner. So that's something to learn as well. If you top tick it on your first add, you can add into it as well. Just understand your risk. Understand your risk and be very rigid about that risk. But look to add into it as well, because SFM would have been a huge profit play if I would have just allowed that one to work for me on the back end. And the last chart is ACAD. Same story here, guys. Didn't get my 3 ads, but got the 2. Ended up pulling back. Had a nice profit on that. So what we can really learn from this, I think, just me taking a look at all these charts, what I can learn really is when I see profit, don't just take it right away. Look to add on a pop and then fade them even further, because SFM and the other one, NWL, some of these are really going to allow for big profit potential if you let them fade for you and add into these positions. You don't have to take the profit right away. Maybe it's smart to take some off the table, but then re-add into it as it's cracking. So traders, that's going to do it for today's video. I hope you learned something. I certainly did. I haven't done one of these recaps on a week before, but this was beneficial for me. It's good watching all these trades, in hindsight from last week, seeing what I did right and what I could have done better, things I did wrong. Really beneficial for me. So let me know what you guys think in the description below, traders, and we will see you all first thing tomorrow morning.